Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we are going to be focusing on market waves and institutional order flow. Okay, so we're essentially going to be answering the question, how do these markets really deliver when you look at them from a macro perspective, right? From a macro point of view, what is essentially happening in terms of the waves, because you should know by now that the market moves in waves. It never goes up forever. It never just goes down forever. Otherwise, it would be extremely easy for everyone to profit. And we all know that 95% of retail traders fail. So that is not the case at all. So if you're someone that's struggling with a little bit of understanding the macro perspective in any asset class, I think this particular video is gonna serve you very well, and it's going to function like a very good exercise for you to actually go through, learn, and apply. This video is actually inspired by a question that I've received from a student in the mentorship, which once again, the same issues keep popping up. So it's not a big deal. We can go through this. I think, as I said, this is going to function like a very good video in terms of understanding the institutional order flow, when our buyers taking profits, sellers jumping in to relieve them, things like that. We're going to be focusing on different waves that print on, once again, every single asset class. So if you're interested in that, then watch the video till the very end, because once again, I'm going to be trying my best to provide you with the best value and information. Now, before we get into that, the mentorship is open. You will find a link in the description below. I do not currently have a Telegram account, so please do not get scammed by someone pretending to be me. My services can only be hired through my website, which is IPDATrader.com. And everything else is not me, and they will take your money and run. So with all that being said, guys, let's get started with today's lesson. So traders, before we get into the actual video of today, just a very quick word from our sponsor today, AAAFX. AAAFX is a regulated broker in Europe. They've been in the industry for over 14 years now, which gives you a lot of confidence when it comes to depositing money into the broker. They offer very competitive and tight spreads. They allow you to trade pretty much anything you want, including Forex, indices, commodities, stocks, and cryptocurrencies. They also offer a ECN Plus account, which is something that I've not seen with any other broker, which essentially means that you're not paying commissions, which is a very good edge on its own. So I can just recommend them as a broker. I've been using them for a while. Their liquidity feed is very accurate. Their customer service is always available to help you. So I can just recommend them as a broker. So once again, thank you very much to AAFX for sponsoring this video. You will find the link in the description below. Sign up with them and enjoy the great trading conditions. Now into today's lesson. So traders, here we are on the drawing board, and as we said before, the focus of this particular lesson is going to be market waves, and institutional order flow, which go hand in hand. So I think we're going to be going through some of the information. So the very first thing that you need to understand, as we said before, is that the market moves in waves, okay? And we're going to be breaking this down in rather a simple manner so that everybody is able to follow. So we all know that this market formation is considered a downwards trend, right? You have to understand that even within this bearish trend, there are different waves or market waves based on institutional order flow that are taking place, right? The very first thing you will notice is the start of this bearish trend is most likely coming from a particular area, okay? It did not start in the middle of nowhere. It's most likely mitigated a previous order block or a previous high, or swept some sort of structure and therefore initiated a downwards trend. It doesn't just happen like that. There has to be a reasoning behind a particular downwards trend formation developing, right? So when we talk about the waves, we have to differentiate between two main ideas, which are expansions, and let me make this a little bit thicker for you guys. So we have, let's move it to the side. We have expansions and retracements. Okay, everybody should be well aware by now what this actually means. So within this trend, this market structure, we have expansions in blue that I'm going to be denoting for you guys. So expansions is the act of creating new market structure lower on a downwards trend. And then we're going to have retracements, right? As I said before, the market is just not going to go down forever in a straight line, because otherwise it would once again be extremely easy to profit. And as we all know, it is not easy at all, right? So we have expansions in blue, pullbacks in green, or retracements, whatever you really want to call them. These are the waves that take place in the market, right? And as we all know, if I go ahead and use black and show you something here, within this particular expansion leg, as you zoom into lower and lower time frame, you will find more expansions and retracements, expansions and retracements, expansions, retracements, expansions, retracements, expansions, that overall lead to the once again higher time frame bearish expansion that is outlined in red over here. Okay, so be well aware that market structure will shift and show you different perspectives depending on the time frame that you're using to view the market. It is very, very straightforward, right? At the same time, market structure will shift bullish and will make you believe that, hey, we're going up now. So you see this, you zoom in, you look at this, say, great bullish structure, let's go long at the order block. And then you wonder why you got taken out. And once again, the answer to that is fairly straightforward. You're not able to understand the different waves. You don't know the ones that you're playing, and why are you playing that, and what are you looking to do with it. Okay, these are key questions that you have to be asking yourself every time you're looking at a market. What market phase or wave am I looking to trade? And the answer to that can only be an expansion or a retracement. And why? Where am I looking to take this? Why is this particular idea making sense? And things like that. Okay, and it gets more complicated than this. We're gonna get into that in a second, but I don't think I need to draw this all the way across. Okay, you get the point. The market will shift trend to create the higher time frame pullback, which once again on the higher time frame is just going to be a straight pullback, but on the lower time frame it's going to be bullish structure, actually bullish structure that you can easily identify building, right? It's a very key foundation to your overall market understanding. And when it comes to my trading, you guys know that I don't sell a falling market as an example, right? If the market is already falling, I'm not going to come in at the low and sell it, right? Even though that's technically the trend, I would never do that because I'm not keen to taking to accepting such a low price for a sell position. I'm more so keen to waiting for a pullback into a particular area of supply where I know that once again, just because we're seeing a move up into our supply, that does not mean bullish trend. It just means pullback into supply to probably continue going lower, because as we said in the beginning, the market is never just gonna fall in a straight line. These are things that you have to understand, okay? And we're gonna be getting into the charts in a second, so if this sounds all confusing, do not worry. It will make much more sense as we jump back into the charts. Okay, so once again, you will sometimes find that you get what could be considered a shift in market structure and then resumes bearish, right? And this can be due to multiple reasons. One of them being this is a even higher time frame pullback that's probably seeking some sort of supply or liquidity on the top that takes out previous bearish structure. But once again, that does not indicate that we're now bullish. Okay, things to remember. And as I said, we're going to be jumping into the charts in a second. I'm just giving you the foundation so that you are able to follow this. rather easily, okay? For a market to really shift its macro trend, which is once again the trend that you identify from the highest time frame perspective zooming out, in order to shift the macro trend, significant fundamental events must take place. Okay, and when we refer this to the current market conditions and we talk about Euro USD and GBP USD, I think it's safe to say that we can all identify that they're in a heavy bearish trend, right? And just because the 1 hour starts printing bullish structure and breaking above potential previous highs, such as we're doing over here, that does not mean that we're now bullish, okay? Because in order for the trend to really shift and the market to now start moving in the opposite direction, we need a key fundamental event to take place. It's not going to happen from day to night. Long-term investors, the people that manages the algorithm, they're all involved in this, okay? And they cannot shift on a dime just like that, right? The market cannot all of a sudden just shift. It requires time, it requires orders, it requires fundamental things to change so that that ship can shift its direction, so to say, okay? And when I'm saying all this information, I don't want you to get confused and saying, well, IPDATrader, can I not trade a pullback? Well, yes, you can, absolutely. This is your expansion in black. Let's use red. This is your pullback in red. Once again, I would look something like this. You can absolutely trade this, the pullback, right? But you need to be well aware what market phase are you in and what are you trading. If you're trading the pullback expecting that it's gonna go and make new significant highs, you're never gonna take profit and you're gonna get taken out as the market inevitably starts following the trend back bearish and takes you out. Okay, it's just a matter of understanding what you're willing to trade and where you're willing to put your money. And as I said, you can play both, but just understand what you're playing. An institutional order flow, which is once again when orders get introduced, orders get taken out, things like that, it constantly adapts to the fundamentals that are taking place. And that's why I stress the idea that ignoring the fundamentals is a stupid thing to do, because these markets are absolutely correlated to how a particular economy is doing, a particular country is actually performing, labor data, things like that, right? And with that, I'm not saying you must and you have to be some sort of fundamental expert, but you have to have some sort of foundation that's going to indicate what's happening in the markets, when are we getting volume, when are we getting volatility, when is price essentially going to pick up, okay? Also understand in relation to the pullback, guys, pullbacks are always choppier and more difficult to trade. If this is a pullback over here, bullish pullback, you will find that it does a lot of whipsaws, it consolidates, it takes you out, it then resumes, then it moves up, then it goes back down, right? It's not as easy to trade as a falling market when it's essentially expanding, pulling back. Now you're looking for the next expansion. So you may look for a confirmation at supply right over here. You get that, you take the short and you ride it, right? It's going to be an easier trade. It's going to be a smooth ride down. It's not going to be like trading a pullback where you're essentially going to get caught up in whipsaws. It's going to break structure. It's not going to make sense. It's going to build liquidity. It's going to consolidate. It's going to move up. It's going to move down. It's not going to take you anywhere, right? Eventually, it will continue and actually create the pullback that you're expecting. But at what cost, right? Because I know many traders who will blow through their capital on their trading account by getting whipsaw on the pullback, not understanding what phase they're in, why is this now going down, it should be going up, things like that, right? So just understand that trading the expansion, it's much easier and it's a steady trend. It's simple. There are very few pullbacks. It's more than likely straight drop. You will get the expansion. You will probably trade below a previous low. You will then pull back again and the trend will continue because this is a higher time frame expansion right over there, and it's just easier to trade. Okay, it's much easier. um it's not going to be too many whipsaws. It's not going to be too many pullbacks. It's just going to be the trend, and you're following the trend. Okay. And as I said in the beginning, following the trend does not mean I sell here when the market is falling and everybody knows that we're going lower, right? Because you're likely to experience pullbacks, or it may pull just enough to take you out and then drop. So for me, trading the trend is basically waiting for the pullback into an area of interest that I'm already predefined as a potential opportunity to then go with the trend. This move up is not a bullish trend. It's not. It's just a pullback into supply to allow for smart money, institutions, whatever you really want to call them, to have a better selling area or selling price point. These are different things that you must be aware when you're looking to trade the market, okay? Because this is no joke. I do see traders that approach the markets like it's nothing, and you have to understand that people lose their life savings, they commit potentially suicide, okay? It has happened, it will sadly continue to happen. But this is not something to be playing around unless you have free money and you don't care and you're just there to gamble. But if you're taking this seriously, if you're putting significant money at risk, you must be prepared. You must come prepared. You must know what you're looking for. You must understand what you want to see, and you must execute with confidence. Okay, you're not going to be profitable if you're not confident in what in what you're doing. And these are things that I teach in my mentorship. So if you're interested in that, and once again, the reason why I promote it is because I'm proud of it, okay, of the service I deliver with the Zoom sessions, with the market mappings on Sunday, with the quarterly price contests and things like that. I'm proud of what I do, so I think it's a very good service and therefore advertise it. If I was not proud of it, I would not even mention it, okay? So just get that idea straight. Now, with all that being said, the foundations in terms of market waves and institutional order flow should be now very present for you. And what we're going to do now in order to wrap this up is very simply jump back into the charts. We're going to be looking at different asset classes, and we're going to be implementing the knowledge that I've just shared with you guys in terms of understanding expansions, retracements, seeing the nature of those retracements most potentially being a lot more choppier than the expansions, which are going to be a lot more straightforward, and seeing where those retracements actually lead into, right? You will see that in the markets in a second. So let me pause the recording. We're going to be jumping back into the charts, and we're going to continue with the lesson. All right, traders. So here we are back on the charts. And as we said, we want to talk about market waves and institutional order flow. We're going to be implementing what I've just shown to you guys. Nonetheless, very quickly for those a little bit curious, we were looking for sales with the group yesterday right over here, right? It is recorded during our Zoom session that we host every Tuesdays. We had the idea of looking for sales initially over here. We reacted, we returned into it as a pullback, and then we expanded lower, right? I didn't get an entry over here. I think some members in my community did. I followed my rules and it did not provide me with an entry, which is absolutely fine because once again, another trade came across and this is played out very well, right? But once again, that's a topic for a different video. Just giving you a heads up that these things happen over and over again. So in order to understand the macro perspective of things, we have to be zooming out and looking at the higher time frame. Okay, so very simplistic. Pause the video here and tell me what the trend is in this particular asset, which in this case is obviously Euro USD. And then we're going to be highlighting the expansions, the pullbacks, retracement, things of that nature. Okay, so pause the video and let me know what kind of structure we're getting over here. Okay, so I've assumed you already done that. Let's get into the answer, right? So whoops, so let's get rid of this. This is what we've done previously. We don't need it anymore. Obviously, this is a market that is pushing lower, right? And if you look at the fundamental outline or outlook, you will see the reason and you will understand why things are happening. But once again, we're not talking about fundamentals, okay? So this is obviously a bearish trend. Now let's look and highlight the expansions in red, retracements in black, and then we're gonna talk about where are they hitting and why. So let's use something a little bit smaller. You have an expansion over here. Let's do black. You have a retracement over here. Red again, expansion, right? And you have to expand till you see a significant retracement, right? So there we go. You then have a minor retracement, right? These are the different waves that take place. Another expansion lower below the low. Every time we break below the low, that's an expansion. Another retracement. A more significant expansion right over here, which you can potentially, and if we actually were to go to a 4-hour, I think this would be a lot better. So we're actually gonna restart the process by just looking at the higher time frame from the 4-hour, right? Just because it's gonna be easier for you to understand where the expansions and retracements are in this particular market, okay? And we could go all the way back up here. The same concepts will still apply, but we're gonna be working with more of the recent price action, okay? So let's start right there at the top. We have a beautiful expansion. We're actually going to highlight all the expansions first, right? Another expansion, another expansion, another expansion, right? Pullback retracement, expansion below the low, pullback retracement, and now we're potentially entering another expansion phase, right? So you need to be well aware of these things. Let's now highlight the pullbacks, which are going to be this pullback, 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 retracement, pullback, retracement, right? Same thing over here, pullback, retracement. And when we look at the nature of these candles, even though we're very zoomed out, it's still very easy to see how much easier trading expansions really is compared to trading the pullbacks, okay? You should be able to understand this. I know we're very zoomed out, but if you have a wider screen, maybe you want to zoom in and you will see the very same information. Expansions are drops, right, that are more sustained, right? It's not like a retracement where we can clearly see that it's a lot more choppier. You can see here, we consolidate, we move up, we move down, we engineer liquidity until when? Until we hit the area of interest. This applies when we're looking for smart money, institutional order flow to continue dropping lower and expanding, right? Same thing happens over here. Very choppy price action, just up and down. Eventually it retraces, it tests where it needs to test, which is more often than not a supply, and then it resumes the expansion. And that's actually what I'm expecting on EURUSD, unless something significant on the fundamental scene changes. But expansions are easier to trade, right? You can see them. They're more often than not just straight drops with minor pullbacks, not like retracements, which are once again a little more complicated, with candles going up and down, not really making that much sense. So these are the things that I really wanted to highlight today. And we can go to a different pair. The very same things will apply. You just have to understand what phase you're in, what are you expecting, and yeah, and managing your expectations along the way. Obviously, it's very important that you do that. And just for the sake of this video, let's go to GU and let's do the very same thing, because once again, you're gonna see the very same story. And I can not show you all this fallback because it will not fit my screen. But if we start from here, which is what we see, well, we can extend this a little bit further, right? We have the very same thing happening. We have an expansion. Well, let's actually do this properly. Let's do this in red. Expansion, retracement. Where does it hit? Once again, the very same ideas still apply. We can see that this time we reach above a swing high very precisely, which I've told you numerous times signifies that liquidity has been collected above the high. Buy positions, breakout traders have taken longs right over here, right, which means that buy positions have been initiated on the at the same time. People that were short in this market, okay, people that were selling are most likely to put their stops above swings, so they have been stopped at the same time too as we retrace up. And now we know that we have a great area to do business because once again, longs have been initiated above the high, shorts have been stopped above the swing, so we know that everybody's out. Now we can make a significant move lower. We can see we chop a little bit, but eventually we expand. Very, very easy to determine and very, very easy to see. Okay, so let's continue following this. Another expansion lower. Let's go with black again. Another retracement up. Where does it hit? Look at the breaker. We're tapping, right? And once again, your job is to understand where are we looking to target as we're retracing. Okay, if you're trading the pullback, your job is to identify where are we looking to hit and why. And you have to understand the concepts such as breaker blocks, order blocks, imbalances, supply zones. These things will help you in determining where price is headed as it's pulling back. But you can see that once we reach the area of interest, price creates a new expansion lower. After that, we get a new pullback up. Where does it hit? The very same story repeats. We have a supply over here, very easy to see. On our way down, we created liquidity in the form of trend line so that when we start moving up, right, we are able to collect liquidity. And once again, see the nature of the retracement. It's a lot more difficult to trade. It's candles going up and down with huge wicks, right? Eventually, obviously, it's going to move up because it's looking to retrace, but it's not as easier as seeing these drops happen, okay? It's a lot more difficult in that sense. So let's highlight the last expansion over here. Once again, I would not consider this an expansion. It probably is on a lower time frame, but an expansion for me would be below the low that I've highlighted. So below the current low, and we can see that happens the moment we trade below it, right? Here we trade below it. This is not a significant pullback, right? So I would adjust this and say that we're potentially in a retracement phase in GBP/USD. However, we've now tapped supply over here. You can see that. So we might be in for another expansion lower and creating new lower lows. So once again, that's all that I wanted to highlight today. You can see that expansions are a lot bigger in terms of the pip amount that it offers, right? You can see the boxes over here a lot wider. So they offer a lot more pips. They're easier to trade because once again, we're expanding the range. Pullbacks are a lot more choppier and it requires a lot more focus in terms of seeing where you want to target and why and where you're expecting the trend to continue. Okay, so when I'm seeing this kind of movement, this black box in particular, I'm not calling it a bullish trend. Yes, it is a bullish trend on the lower time frame, but I know that this bullish trend is only taking place because we're looking for a better area to continue going short, which has been and will be the trend until some sort of macroeconomic shift takes place. Okay, so this is the combination of market structure, market waves, and institutional order flow. You have to be able to determine these different ideas. They will serve you very well in your overall understanding. So I hope you guys enjoyed the video. I'm not going to rant for too long. My Instagram is in the description below. I do post analysis from time to time. You will also find the link to my mentorship in the description below, which I highly recommend because I run it and I know what's there and I know it's well worth your money if you're looking to elevate your education and market understanding to the next level. And with that being said, I appreciate you if you made it through the entire video. I'll talk to you guys soon. Feel free to to leave a comment, feedback, things like that. I'm always welcomed to read them and apply things that I deem as logical. So take care, everybody, and I will see you guys very, very soon. Take care.